Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450k in funding. The best part, you keep 100% of your first 15k in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description.
What's up, guys? What's going on? Hope everybody's doing well. It's Brinks Trades coming to you live within the week of breakdowns. Hope everybody had a good trading week. If you did trade, personally, I actually didn't take any trades this past week. Just the volatility of the assets that I was looking at are not great. So what I want to do is just kind of go through some of the assets. Obviously, we're going into September. We know that September is usually going to be a time of the year where the market is a little bit more volatile. So I'm going to break some stuff down. We're going to touch on NASDAQ. We're going to touch on the rest of the indices and Euro. And we're going to have a good time and obviously get back to our Labor Day weekend in the U.S. It's a holiday weekend. And so a lot of people are not on the charts or thinking about this. But it's important to be on the charts today because next week is going to be September. And we're going to start to see a lot more volatility back in the markets that we didn't see the last month or two. So I'm excited for it. I'm ready for the market to get going. Can take a lot of trades. We also had some crazy news this week that with FTMO coming back to the United States, that's really big for anybody that trades prop firms because they are undeniably the leader in the prop firm space when it comes to any asset class. It doesn't matter if it's futures, forex, or any market. I'm sorry. So having them back in the U.S. and having access to U.S. traders means there's going to be a lot of opportunities for traders this next year. So basically get funded, I think, up to $400,000. This is not an advertisement for them. I'm not affiliated with them, but it's just a really big opportunity. So I'm excited for it. I know a lot of people, I've already been making my plans on how I'm going to attack that prop firm and get funded with them. And, in addition to the other ones that I'm already with, and really start to go crazy this third quarter. So hopefully you guys are doing the same, but let's, nonetheless, go ahead and get in the charts. And then obviously shout out Hugo, shout out the people that are watching from all over the world. If you're watching from someplace, go ahead and, log in and tell me where you're watching from. So, let me go ahead and share my screen. Then again, if you guys, it's your first time watching, you should know me by now. If you don't, my name is Blake, aka Brinks Trades. I've been a day trader for about a decade now. Actually a little more than a decade. And I started trading in the Forex space about 2015, then switched to futures in 2022, 3-ish, something like that. And really right now, I just kind of trade whatever. So I consider myself a trader. I don't really necessarily consider myself tied to a particular asset class, whether it's currencies or indices or futures or Forex or whatever. If I see the setup and I know the market, then I take it. And usually that's going to be futures in the currency space or the indices, so in either the futures or Forex space. So those are my markets that I trade, and, they've been pretty good to me. So let's go ahead and share the screen and get into it. Let's see if I can share a screen. Give me 1 second, guys. Let me do this. Share screen. Tony says I have a trial from FTMO in 92. I'm not sure what you mean by that, Tony. Hold on 1 second, guys. I'm trying to share my screen. I'll get live with this. I'm gonna actually leave this and come right back. Just give me 1 second, guys. Okay, hopefully you guys can hear me. Hopefully everything is okay. Yeah, that was more difficult than I thought. So, all right. So again, shout out to Hugo. Shout out to Maryland. I know some people in Maryland, man. I got a lot of people in Maryland. And then Tony, again, you said I had data from an FTMO trial back in 92. I'm not sure what that means, 92. You might have to break that one down for me. I know you're not talking 90, 92. I traded a trail account in 92. Like 1992? Is that what you're talking about? I think that's what you're talking about. Because I know they weren't out in 92. That might have been a different company back then, if that's what you're talking about. Anyway, let's go ahead and get into it. We're looking at the dollar index again, because I start with dollar index every week. And so we've pretty much been calling this run out perfectly. If you guys remember, again, it's a new month starting on Tuesday, so we got to go to the monthly time frame and see what's going on there. So basically, everything's really playing out the way that we saw it, according to the monthly time frame, the past few months. So we've been on a run these last 3 months. We broke structure back in May, and this summer has really just been another confirmation the market's heading down. As far as the assets go, I think we're at the start of a long-term depreciation in the dollar, where I think we could eventually come down here and take these lows. But there's a few levels that in between this and where we're currently sitting that I think the market's going to potentially run for. So again, over the next few months, I really want to see this market continue to run and decrease lower and lower, and really start running for sell side liquidity. But this is really good monthly time frame. So the overall market is really telling us that it's bearish on dollar. On the higher time frames, week to week, we might see some bullishness, but really the bigger monthly time frame, same bearishness. So gotta stick with that. Weekly time frame, you can see here that we've been getting a lot of wicks to the top side. So we can see that they're really running for areas of sell side liquidity. We get this huge wick that traded back up into this overall area of interest here and respected it. I mean, really, we've pretty much been respecting this bearish order block here for the last few weeks, pretty much the entire summer. We tried to trade over it once before, but really for the most part, we've been getting wicks to the top side. It shows us that we're trying to run for buy side liquidity above these highs and really are making lows and attacking these lows out here. So overall, this is a really good bearish setup. We did trade out into this overall weekly gap, and now we respected initially, but it looks like we're probably going to head towards back down there. So I'm going to look at two different levels really for this week. I don't know if we'll get all of it this week, but this is really where my eyes are drawn to in terms of sell side delivery. I want to see if the market can come down here and take this low. And then also in the shorter term, or maybe like a mid-level point, I want to see if we can come down here and grab this wick as well. So these are two levels that I'll be looking at on dollar for us to potentially run to this week. So taking it from that low down to there, that's the first level that I'm looking at. And then, yeah, obviously sell side, that big low right there. Now, this is obviously the monthly low that we called out. It could take all the way down here. It might be a few months. It could be, I mean, this could be a year's worth of price action. It could be a long time. It might not even get down there, right? But this could be a long time for us to drop all the way down there. But in the short term, I think these two levels here, at 95.66 or 95.81, those are really two levels there that the market could potentially run to. So let me chop back over here. Went on the website. Okay, 2022. Okay, see, that's just. I was like, God, no, FTMO has not been around that long, man. But yeah, I mean, they've been around for a while. I've been funded with FTMO. Wow, I was funded with them. I think I had a small payout with them. I had actually some decent payouts with them, and then they went dark, and I think I had blown the funded account before that, so I wasn't able to kind of redo it again. But that was back in 22 or 23. But they're a really good firm. They are one of the most reliable ones in the space, and so I would definitely advocate you guys check them out. Especially if you're trading CFDs and you live in the US, because there's just not a ton of options for CFDs. If you don't like the futures setup, that's probably the easiest way to go. I'm gonna go straight for a couple 200K accounts and try to get fully funded with them right off the bat. It's gonna be what I'm gonna be working on between now and probably however long it takes. But that's just kind of my goal. For the cost, again, I think it's $1,200 for a 200K account. And I'm gonna go straight there because it's easier, and you can get maxing out with them all together. It gives you another $40,000 in drawdown. So if you think about $40,000, what could you take $40,000 and grow to? So that's kind of what I'm looking at there. And if there's any other CFD ones in the space, I'll probably check them out. In addition to the futures firms that I've been trading, like Top Step and things like that. I think if you trade Forex, you trade currencies. The thing that I do enjoy about CFD prop firms or the Forex space is that it is very easy to stick to risk parameter with the Forex, right? They have full contracts in the future space, and so sometimes it's harder to get the right appropriate amount of risk down. But with the cool thing about the Forex space is that you can really dial in that risk and get it to exactly the dollar amount that you're trying to risk, not like a generalized dollar amount. So every market has pros and cons, obviously, but I think that is probably the biggest advantage of the Forex space is you can really manage your risk extremely well. So that's the one thing. So let's look at Euro. So again, we talked about Euro being in this space for the last, honestly, month. This is Tuesday, the 5th of August, and pretty much the entire month of August we spent in this gap. This is consolidation, right? And the thing about this zone here is you kind of have to look at a couple different things. You have to look at the weekly time frame and seeing what you're getting here. And right now, this is just messy. You see a lot of wicks to the downside, right? That means that we could be gathering sell side liquidity on a run up, right, on the weekly time frame. If we go to the monthly time frame here as well, monthly, you can see that it's almost the opposite of dollar, right? So in the long term, if we think dollar broke structure to the downside, it's going to keep going lower. In theory, we should see this as a consolidation, manipulation, distribution, and maybe we're heading for these highs over the next few months, right? Or months to years, right? In this third quarter, maybe even. And so that's going to be what I'm going to be looking for long term, right? But we have to have this line up with what we want to see, obviously in the daily and the weekly time frame. So if we think monthly time frame is going to be bullish, then we do probably eventually would want to see an inversion of this gap, right? But the tricky thing about trading is that you got to make sure your time frames are aligned and you can't jump the gun. So as of right now, based on the daily and the weekly time frame, this is still respecting this fair value gap. So I still want to see this, at least close below here, maybe take the lows, maybe trade back into this gap, etc. You can't really, just because you see something on the monthly time frame doesn't mean you can automatically just trade that, right? You have to wait for these time frames to line up. So as of right now, I do want to see the market continue to go lower and respect this fair value gap. It's been technically respecting it the entire month of August. So I would love to see this continue to go down and really attack sell side. We'll get rid of this so you guys can see better. And again, this is Euro futures, aka Euro USD if you're a Forex trader. Again, I trade both markets, so I look at both assets, but it's the same thing. It's the same chart on both, right? There's your fair value gap, etc. I just look at the futures because it's more, all of my money is really in the futures market right now. So that obviously will change when I start going back to the Forex challenges and things like that. But as of right now, it's where we're at. So, okay. So what we want to see here is the market continue to go lower, right? Based on this respected. If we fully close above this gap and invert it strongly and convincingly, like maybe a close above here, then I will start to transition and look for us to attack these buy side levels. But right now, the hardest thing to do is call the market when it's, really sitting at an equilibrium level, right? And if I go from this low to this high, you can see the market is trading around the 50% level. Oops. Around the 50% level. And so that's called equilibrium for your smart money traders out there, or people who want to trade smart money concepts. It's really in the middle of a range. And the hardest thing to do is call where the market's going to go, right? And you can see here that we have really just been wicking off of, buy side and sell side levels, right? And so when we talk about the role of the market in consolidation, all it's doing is just really running for liquidity. It ran out this high, then it came around and took out this low right here, came back down there and took it. And that's all consolidation does, just runs old highs and runs old lows until it's ready to go up, because it's just attacking the money. There's money above these highs, money above these lows. People are waiting for a breakout on this, right? They probably put their buy orders there and said, cool, if it's going higher, we're going to catch the breakout. And that's when the market came up, whipped them out. Same thing here. We're going to catch the breakout. Market came down there, whipped them out, and then turn around and whip them around. You will blow your money in consolidation. I'm going to be honest with you. If you don't understand that higher time frame consolidation is going on, you will blow your account very quickly. And so one of the things that I always had a trouble doing is recognize consolidation, especially with wedge patterns and things. So I try to make sure that I'm respecting all of those levels. So one of the things that we gotta make sure that we respect is those. So let's go ahead and go to GBP USD. I'm gonna go over to the, oh shoot, hope I'm showing this chart. I know I'm gonna go to this comment section and it's not showing the chart. I knew it. Hugo, my bad, Hugo. I popped up in the wrong one. But basically, let me go back to this one and draw it. At least I caught it this time without having to check the comment section, even though you guys already said it. All right, so when it comes to Euro USD, there's, again, I'm just calling out two things. Again, the monthly time frame here, Euro USD, Euro futures, same thing, right? So the monthly time frame is right up here. On the monthly time frame, again, you can see just like dollar, we broke structure, right? We were consolidating, manipulating, and we've started distribution, right? And so in theory, if dollar is bearish and wants to keep going lower, then we want to keep going bullish, right? And if that's the case, then Euro wants to continue to go higher, right? And so if that is going to truly happen over the next few months, this is a monthly time frame that we want to see the market invert some, the bearish signals and really start to attack buy side liquidity, right? That's what we're going to keep looking for over the next few months. Now, the monthly time frame is a very crazy time frame to try and trade. So you got to stick with what you see here on the daily. So keep it in the back of your mind, right? Like we could be going bear or bullish based on the monthly. But as of right now, we are very bearish, right? We've been respecting this fair value gap pretty much for the entirety of the month. Because we're still respecting it, I gotta still run with this bearish bias, at least in the short term, right? It could come down here, it could come down here, and then turn around and still shoot right back up just to stay in line with the monthly, right? So you never know, but it's really hard to just trade the monthly time frame as it is. You got to make sure these things align. So if we invert this level here at 1.744 on a very strong bullish candle, something that lets me know the market is not trying to respect this, then we're going to keep, then I'll look to attack these buy side levels here that we call out 1.88 and 1.801. So with that in mind, again, when we're sitting in consolidation, you just really want to make sure that you are paying attention to, catching that higher time frame consolidation and making sure that you're not getting sucked in. And a lot of times as a trader, I would used to get caught up in consolidation pretty heavily, especially when it happened in lower time frames, that 15-minute, that 30-minute time frame. I used to really miss it. And so now I really make sure that I catch the higher time frame consolidation or the lower time frame consolidation, make sure that I'm not getting caught up in that. And the other thing, Hugo, that I was calling out was basically just the market really tends to run in consolidation. You'll see the market really run for, it'll set an initial high, set an initial low, and it'll keep wicking off of those things and taking it, right? So you have this level of buy side right there, the market kept wicking. You have this level of sell side right there, the market came down there and swept it and kept going, right? And it's just going to keep doing that until we get the actual breakout, because there's orders above and below because people are trying to play the breakouts, right? So imagine being short right here. Next thing you know, you're down 100 pips because you wanted to catch the breakout, or you said, I'm going to long this right here, right? Because if it breaks out above the side, it's probably going to keep going higher. So you put it right there. Next thing you know, you're getting dragged, down another 150 pips, right? So it's a game, and it's all a big game. So same thing. Let's go to GBP USD, aka Euro future or British Pound futures. I think we're in the same pretty much state here. This one's a little less clear than the other ones. If we go to the weekly time frame, you can see here there's a lot of wicks to the downside. We traded back into this old imbalance here, this old fair value gap from this low to this high, and respected it, came back down to the secondary one, wicked it. There are these relative equal lows right there. That is kind of scary because it does let me know that is liquidity building right there. But we are getting wicks to the downside here. We traded back into this order block and are respecting it pretty strongly. Again, just like, euro and dollar, we did break structure on the monthly not so long ago. So ideally, if I'm looking at this, we are respecting this area. We came back down here, broke structure to the upside. I would be looking long term, like over the next few months. I would want to see the market do that. But again, we got to play with what we see and what we can deal with at the daily level. And right now, this one's it's not really clear day to day. I am seeing like wicks on the higher time frames for wicks in the higher time frames to the downside. Lets us know that we're getting orders to go higher. I am very much interested in the market hitting here, though. There's two levels that I want to see the market really run for. Again, these relative equal highs here. And then this fair value gap right there. So if I do have a target, I'm looking at these two levels. Get rid of that. Those two levels for the market to hit. But again, this one's a little less clear because it's not really trading in its own fair value gap. It's just kind of consolidating and kind of like a big wedge pattern. If you can draw something like this, right, you can see the market is consolidating and the highs are getting lower and the lows are getting higher. So really anybody's guess, to be honest with you, but I would like it to follow what dollar and euro are doing. So that means eventually I'd like it to, obviously over the next few months go up here. Maybe it respects, and kind of follows what euro's doing to go lower, take out these lows, take out that sell side that we talked about, and then turn around and go right back up. I don't know. I don't want to over project. And I feel like if you don't say, I don't know, when you're trading, you're probably not a good trader. So I'm gonna look at gold next, right? So gold is kind of an easier call this week. It looks like this one is a fun one. I actually called this out last week. I wish I was looking at gold last week because I did not look at gold, and I probably might have traded this. Again, you guys know my relationship with gold. I trade it. Now it's on my watch list. It's still not my favorite asset in the world. So if we take a step back here, we have been in this wedge pattern for the longest time, right? And again, I don't really trade wedge patterns traditionally like the way that most people teach. They'll say like, if it violates this trend line or this trend line, then you buy or sell. I'm really looking for my smart money concepts to play out in this. I really draw these out to let me know that the targets here that might not get hit because the volume is getting pretty much smaller and compressed, right? These lows are getting higher and the highs are getting lower, and so it lets me know not to try and swing for the fences on trades until we actually get out of this range. And so what happened here is the market really broke structure to the upside and traded back down into this fair value gap here and this level, and the market said tend to start running up. So what I'm interested in is what I called out last week. Is I said I want to see this level inverted if we're going to stay bullish. And again, if I would have caught this, I probably would have tried to trade this. I totally missed it. And to be honest, with the volatility being like low across the board last week, I wasn't really interested in trying to trade. And so this is gold futures again. So just to make this clear, Nakesh, Mehdi, what's going on, man? So this is gold futures. This is basically XAU USD, but the futures version of it. Someone's calling this out in the chat right now, so I want to make sure that we are looking at the same thing. It's the same chart pretty much. This is XAU USD, and this is gold futures. It's pretty much the same thing. The numbers might be slightly different. Oh, I see what he's saying. That this is actually took this high on gold, and the other one didn't. Okay, they're pretty much the same thing though. I'm gonna look at gold futures and I'll analyze. Well, actually, I'll look at XAU because there's probably more forex traders on this call. Here, either way, the breakout here, the level that I was watching going into last week was probably this level here. So XAU had inverted, or gold futures did not invert this level, this fair value gap right here, but XAU did going into last week. So ideally what I wanted to see here is I said the market, if we go back to gold futures, I wanted to see that level inverted, right? And if I inverted that gap, it lets me know the market's going to want to continue to go higher. Again, I'm not really interested in shorting gold because of everything that's going on geopolitically. This is a time where gold is probably going to want to fly off the handles. So again, catching that breakout, obviously I missed that. But again, if we could take in gold to the highs, then that's what I'm going to be looking for. So again, we took out this high on gold, or on gold forex XAU, but the future is still trading below that. So it's probably a good sign the market wants to keep running higher. So I'm going to get rid of these lines here because they're no longer relevant anymore. And I'm really going to focus on this trend line here, not trend line, but this level here. I want to see the market run for this over the next few weeks. If it doesn't already do it this week, right? Maybe potentially us trading back into this fair value gap that's going to form with the close of Monday's candle and then taking things higher, right? This is pretty much a clean level that I want to see the market get to. So I also will evaluate the market as well. One second, guys. So I want to see if the market will take these levels here and then continue to go higher. And take out this high here. So that's what I'll be looking for this week. Is see how we react to this level here. Do we consistently stay above it for the majority of this week? But then also, can we attack this higher time frame level there? So that's gold. I'm I'm gonna take a look at NASDAQ really quickly, switch it over, and then I'm gonna go to the comment section real quick, just see if there's any other comments. So that's why the XAU USD chart is a little bit different. Going back to that person's question though, but again, it's pretty much the same thing. I know that, like, if you trade Forex broker to Forex broker, you know, it's pretty much the same idea. So Tony says, I see the power of 3 going into the New York session. I don't know if you're talking about gold. I'm assuming you're talking about gold, but this, you know, it's a really good thing to be able to call out, man. And I'm glad that you're able to see it. So that's good. Let me pull up NASDAQ real quick. So NASDAQ is interesting too. Again, NASDAQ looks very similar to Euro right now. We really took out these highs, took out the all-time high back at the beginning of the month, and then I've been trading in this range, traded back into this fair value gap, actually inverted it, respected, and actually came back down to the downside. So this is interesting. This is kind of what's called a reclaimed fair value gap. So really, we are respecting it currently. I would like us to continue to go lower. I'm gonna look at this. I probably won't trade this because I don't like shorting NASDAQ personally. Like, I won't. It's an investment vehicle, so it's supposed to go higher over time. And I have a hard time trading shorts on indices, or a hard time like being able to sit through those trades, because I always think about like the point of this is for it to go higher. But if you can catch a good short, it's you know, it's a good valid setup. But so don't stop me if you see the short setup, you know, feel free to do what you got to do. But it's probably my own mental kicking in and kind of trading history there. But yeah, so ideally we see the market really respect that this fair value gap will continue to run lower. So so ideally I want to see the market, you know, see if we can get down to 23,031. That's the level that I'll be looking at. We are technically respecting that bullish fair value gap still, but this looks like a very clean break in structure. If I were to go down to the 4-hour time frame, this looks very much power 3-ish, consolidation, manipulation, distribution. So I'm looking at these lows. I want to see the market come back down here. So this is going to be my target for the week. I'm literally going to say like this level here, like this low is my target. Sell side there. So we'll see if we can get that. Ideally, I would love to see the market do something like this. Right. And trade lower. ES. This was a little bit harder to call. It's actually a break-in structure too. 4-hour time frame, ran up, took the all-time high, and it's respecting it currently on the daily, so it's a little bit different. So actually, let me jump to YM. I tend to use, if I can't really get a fair call on what's going on, then I try to look at all three just to see if there's any like divergence plays or anything that kind of tips its hand. So this is very much bullish. YM is very much bullish. ES is very much bullish, but NASDAQ is not bullish. Huh. So I think in this case, I'm going to play this one by ear, but I'm going to kind of look at each of these charts a little bit differently. I would say if we come back down here on ES and really violate these fair value gaps, look at this right here. this daily fair value gap. I'm going to stay bullish on ES unless we violate this. If we violate this, then I'm going to be looking here for the lows. NASDAQ is already kind of there, right? Like it's already kind of respecting its daily gap, which I think is interesting. So this could be tipping its hand that this market does not want to go up anymore. And everybody's market could be going lower. And that's basically just called an SMT divergence, where the market basically shows you on one asset class that no longer wants to go higher, even though one did. The other two did. So it could be saying that ES and YM have hit their liquidity they're trying to hit, and now they're going to reverse. And then YM is probably going lower. So yes, that's what I'm looking at for this week. I don't really have any other asset classes that I want to take out. So hopefully you guys got a lot out of this. I will stay on for any questions that you guys have. But that's pretty much what I'm looking at. I would say out of everything that I'm trading this week, I think Euro is still probably the best setup overall. It's just, again, we've been in this market for the last month where it just hasn't had great volatility on the currency side. It looks like gold's starting to get some volatility, which is good. The indices are kind of like hit or miss. NASDAQ, the one that I look at, has been chopped pretty much the last few weeks. This is not great price action here, but it's showing us signs of bearishness. ES and YM could be showing us signs of bearishness as well. They did take out their all-time highs, and they did trade back into a gap. So I'm really going to take the next couple of days into the first of the week, probably that Tuesday, Wednesday when the markets open back up, to really kind of get a better feel for if we are the directional bias when we're going on the week. So I'm not going to be too eager to really take a trade to start things off. But if we talk about Forex Factory, I'm going to jump there really quickly on this, so you guys can see what's going on news-wise. But really, on Monday, we know it's the bank holiday in the US, so we don't expect anything. Tuesday, we have ISM at 9 o'clock. Wednesday, we have JOLTS at 10. Then we have unemployment claims on Thursday. And Friday, we have NFP. So honestly, this first week, it's not going to be me trying to push the button and go crazy. If I do see a setup, maybe on that Tuesday or Wednesday, then I'm more likely will be able to take it. So we'll see, but I'm not really too eager. I think maybe Tuesday and Wednesday is probably going to be the days that I'm going to look to trade and just kind of feel this first week out. The Monday holidays are kind of always interesting ones to trade. So, usually these weeks are weeks where I'm less aggressive, more defensive, and I'm just trying to get a couple wins and get out. I'm not really trying to go crazy, and add in the fact that it is NFP week. So this first week will probably be, just relatively chill. Hopefully by the end of this week, we'll start to see the volatility fully back, and we'll start really going crazy going into next week. So just again, even though I do expect the volatility to be back, I do want to see the market continue to go lower. G's Web says gold. You got to rewatch this again because I just did gold. I spent about 10 minutes on gold. So when go back and watch the beginning of this call, and you should be able to see the gold analysis. But I'm bullish on gold. Yeah. So ideally, again, and this is pretty much my standard, trading ideas and plans when I go into September. Again, I'm expecting more volatility. I'm also expecting, obviously, this first week to get back, the market back where it was at the beginning of the year. Obviously, that spring time frame, they're going into early summer. So really want to make sure that we are, just being careful, right? This first few weeks into September, and really letting setups come to us and taking those things again. So, so I want to share over with you guys again, talented10th.com. This is my trading community. If you guys are not in the free Discord, please join the free Discord. This is free game that I give away every week. It's little updates for me, little thought processes for me. If you guys look at the Discord here, you can see what's going on in here. Sorry about that, guys. I hit the wrong link. Okay, so if we look at the Discord here, you guys can see. Again, this is my trading community talented 10th. Again, this is, if you guys are not in the free Discord, please join the free Discord, because again, this is where I do a lot of updates for the general chat. We also talk about, when we talk about our mentorship group, which is where I teach directly. It's tied to a WAP account where I actually give more detailed analysis of what I want to see on the actual trade executions, right? Like, but same thing with Euro. Talk about, this trade setups and what I see is going to happen, actually taking positions on trades, right? And breaking things down in real time. You guys can see here, this is a win that I had earlier this month for 18 contracts, about 40, what is this, like about 30 points, 30 pips. So again, this is where it all goes down. It's also tied to a WAP server where you guys can actually learn from me directly. There's a bunch of videos. I try to update those every week with new things. And then we also do a Sunday call where I basically take everybody's problems and trading weeks and really just get a better understanding for what guys are going wrong and really give you that one-on-one mentorship that you really need to be successful. I found that when people learn a strategy, it's not enough to just learn the strategy. You have to know the thought process of the trader, right? And if you don't know how the trader is going to think in different scenarios, then it's going to be really hard to understand how to actually execute that strategy, right? And so trading didn't click for me until I not only understood the strategy, but the thought process as well. And so on those Sunday calls, basically is where I break down everybody's weeks. They give me their problems. They say, this is what I was seeing. Then I give them insight. We also, and it's going to be happening more frequently in September, but we do live trading sessions where you guys can see me walk through trades, or at least at the minimum, I'm in here typing and chatting out what I think is going to play out as there's playing out. Right. And so you guys get access to all of those things. So you can really see what I'm thinking. Like this whole week, I was telling my Discord, hey, look, this is not the week to be trading. It's not the week to be trading, but also updating it every day. Right. It's letting people know like my thoughts each day, but obviously each session when we are in better trading conditions. So that's the Talented 10 Discord. If you guys are interested, the place to go to is talented10trading.com. This is me. Again, not one of my best pictures, but we're here. Talented10trading.com. Again, where you can join the free mentorship, or if you just want to work directly with me, then upgrade to the mentorship as well. So that is my platform. I am happy. I do love teaching. I'm not going to do it forever, but I do love teaching. I love people learning. And so if you guys are interested, at least join the free Discord, check it out. Again, I say this every single week. If I would have had a mentor that could work with me directly and not only teach me the strategy, but go through charts, answer any questions when I first started, then that would have changed my game completely when this came for me to start trading. So hopefully you guys really enjoyed this call. Again, follow me on all social media. Brinks Trades is the social handle. I'm on all platforms: TikTok, Instagram, and YouTube Shorts and stuff like that. So join on that platform. You guys can stay locked in with me. Ask me any questions. If you're in the Discord, it's the best way to get in contact with me, right? You can message me on Discord. I answer all of my messages. Social media is a little bit slower, but I still get back. I would say, again, download the Discord, join it. And again, it's free, right? The free version is literally free, right? You can literally be in that general chat for free, right? Obviously, there's a fee for the mentorship, but the free one is literally free. So just get in there and take advantage of it. So, all right. I'll stay on for any questions if you guys have any. And then also if you, I'll let y'all go because I know it's Labor Day weekend. It's the last big holiday for the summer. So hopefully everybody's taking advantage of that if you live in the United States. So I'll stay on for a couple minutes and then we're good to go. Okay. All right, guys. Hope you have a good holiday weekend. And then, yeah, hit me in the Discord, hit me on the chat if you have any questions. So, peace. Have a good one.
Hey folks, what a view behind me. I'm at Blackball Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackball Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Blackball Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. You've probably heard me talking about trading with confidence, and honestly, it's a lot easier when you're not risking your own money. That's why I wanted to mention Blue Guardian. They offer instant funding or a challenge to get you started, and up to $400k in funding, weekly payouts, and a 90% profit split, and they've already paid out over 15 million to traders around the world. Plus, they're sponsoring Birmingham City FC and Chris Eubank Jr., so you know they're serious about backing performance. Check them out at blueguardian.com or check the link in the description.